TheoTrade. This is Don Kaufman. October 26th, 2022. Just about 5 minutes left inside of this trading day here on this Wednesday afternoon. S&P futures down about 22 handles. The Nasdaq off by a cool 2%. Well, that's predominantly, though, because of Microsoft and Google earnings. Speaking of earnings, well, you, of course, are going to have the artist formerly known as Facebook, Meta, after hours. Not too concerned at this point, as it's already down some 6%. Nevertheless, big question, of course, for the trading session right here, right now, is this market rally on the rocks? So with the S&Ps down, immediately everybody's thinking, that's it, we're going to go back into some sell side activity. Not too fast. There are some very detailed areas of this marketplace that are just in stark contrast to anything that we've seen in like the last month of trade. And I want to point that out in this evening's video, because again, everybody's looking at this and like one down day, it's only 0.6% right now. And you kind of think like, that's it, rally's over. First and foremost, I want to bring to your attention in terms of, is this rally over? We are still broken outside of the volatility box. Let's actually cruise back once again to the 30-day 1-hour chart. And the reason I use this is to emphasize when I term this volatility box. And that volatility box runs from roughly 3,600 to, let's be very, very specific, about 3,800, but even more specific than 3,800, the upside of this actually sits somewhere right around like 3811, that volatility box. We're still outside of it, but only by a hop, skip, and a jump. I mean, come on, we're trading right now, 3844. We're just a little bit in limbo. But that's one aspect of it. And for market technicians, you're like, well, that's enough. But what is in such contrast, okay? Well, first of all, are you aware that you have the Russell today still higher in the day? Obviously, the Dow is still up today, but neither here nor there. But the Russell is actually higher in the day. But then again, so are financials. Financials actually had a fairly strong bid at one point today. It faded minimally. The energy sector is also bid up today. I mean, you have to realize, like, well, this is all kinds of chaos, because when you start to dig into the advanced decline line, well, that's not what you would have expected. Most of today's trading session, and this is something that, I got to hammer, because, as I said, it stands in contrast when you think like, that's it, the rally's over. Most of today's trading session actually saw not just a positive advanced decline line, but at one point today, okay, we actually had 90 stocks up, 10 stocks down, with the S&Ps basically massively unchanged. So obviously, mega market cap, and mega market cap being Microsoft, down again a cool what? Almost 8%. I mean, that's a pretty devastating hit, and it's going to close at or near lows. Apple's taking a mild hit. Amazon, which doesn't produce earnings until, Thursday. Obviously, Meta, which, as I said a moment ago, this is going to have earnings after the bell, but it's already down 6%. Google, down a cool 9%. Outside its expected move. It's expected move about $7. So this has been a day of mega market cap, whereby the advanced decline line, throw it out the window. That's one of the things that stands in contrast, because lately, when markets have moved, we've been fully correlated. So you have to call into question like, hey, are you ready to trust that the marketplace is just going to turn around and sell off? But the advanced decline line is actually positive. So the marketplace is taking the earnings from Microsoft, from Google, it's taking them in stride. Because had this occurred 2 to 3 weeks ago, you kidding me? The S&Ps would be down 100, 150 handles. Okay, why? Because 2 to 3 weeks ago, we were in full-blown correlation. Didn't matter what happened, we were correlated. The next thing we have to actually show that's a bit of contrast, of course, we're now 2 up days in the bond market. Now, let's not get ahead of ourselves. It's 2 days that we have a bid under bonds. We've seen this movie before, where we get these short-lived jumps in the bond market. Now, the bond market, I'm not ready to actually call this one a rally, and I'll tell you exactly why. Tomorrow morning, we're actually going to get that first print of GDP. That, people, there is the closing bell. The first print GDP comes out tomorrow morning. And that GDP print, that could change the way you feel about the bond market in a hurry. Why? Well, imagine if GDP comes out better than expected. Expected in this point, point in time, let's call it, right around that 2.3. But nevertheless, I think GDP, if it comes in hot, all of a sudden the bonds could get absolutely clobbered. Remember, good news can be implied disaster for the bond market, meaning good news for GDP could actually devastate the bond market, in which case we can go into a fit of rage in the marketplace. So again, some contrast. We haven't seen this kind of price action lately in markets. And you got to call into question not just like the rally in the S&Ps, but everything right now. It's a fairly pivotal moment for markets. And again, here we are talking about, have we actually broken, outside that range? Absolutely, unequivocally, yes. We're above that, 38.11, but everything is in question right now. And it's not just because of earnings. Obviously, earnings, that wasn't enough. Earnings was not enough to knock us back inside the range. The marketplace evidently wants to go higher here. It's going to need, again, a significant catalyst, well, like GDP, to knock us back, into the 3,800 kind of volatility box, if you will. Now, moving down the list, some of the usual suspects, the dollar is also and should be called into question because at this point in time, it's not just dramatic. Like this is real sell side activity. Once again, however, the dollar, let's not get too far ahead of ourselves. GDP print could rip this marketplace tomorrow. Nevertheless, I think we have to start to readjust some of our thought process right now. And that is, dollar down, dollar down. Does that imply, rally in the marketplace? Possibly, bonds rally. Does that imply rally in the marketplace? Possibly, because part of me actually believes that we may be on the verge of even seeing, if you will, selling in the S&P 500 and a rotation out of S&Ps into the bond market. Nevertheless, the dollar, I got more questions than answers than that one. The dollar is going to be anybody's guess. Again, that GDP print is going to relinquish, well, a lot of the questions that we presently have. All right, moving on down the line over here, SPX. The reason I'm going into SPX is each and every Wednesday, I like to provide, if you will, a little bit of what I term orientation of where the market presently is and what we have in terms of expected move thus far on the week. So this week, expected move, where was it? I'll remind each and every one of you, we always put this in the weekend update. We'll kind of switch the gadget over here, come over to the scratch pad, take a look. We had just about $114, again, about $114 expected move. So you're anticipating, well, up 114 bucks or down 114 bucks. We're home. We pretty much hit it yesterday, hit it again today, pulled outside expected move, and then came in. So if you will, and it's actually an important lesson in that because you kind of already checked the box, if you will, of expected move. Some of you possibly even put on a couple of flybys to the upside over here. Nevertheless, we pulled back inside of that expected move. So what kind of risk, given the fact that we have, GDP coming out tomorrow, Apple earnings coming out, Amazon earnings coming out, obviously, Meta coming out after the bell, which we can look at momentarily, but what kind of price action is the marketplace anticipating just between, right now, and of course, Friday's expiration? So we had about $114 for the entire week. We're still looking, at about $64 of implied movement, for what? That's just Thursday and Friday's trading sessions. So for the most part, there's still some pretty heavy volatility kind of packed in here. We're on kind of pins and needles whether this rally's even going to hold. Okay. And I think at this point, let play. All right. What that basically means, let it kind of play out a little bit. This is not something we're going to be able to jump ahead of too much, right? Trying right now to handicap the move of the S&Ps is dangerous business. On one hand, we can explode right back up here, okay, to 39.31. On the other hand, okay, as soon as we drop into 38.11 or below, that might as well be the same thing as 3,600. We drop under 38.11, we're just going to be pinging back and forth inside of the volatility box. By the way, you can see S&Ps are jumping right now along with Nasdaq, so somebody had some decent earnings, okay? But again, the rally at this point, all right, it's not over. It is not over. When I'm talking about that move, there we are. I'm largely thinking, yep, there it is. It's on Meta. And Meta, of course, being Facebook, I mean, this is kind of ironic. If you're looking at that 140 level, well, the irony is that's pretty much where it was trading like yesterday. So the entire marketplace is rallying on much of absolutely nothing other than a very simple bounce back, if you will. And this is far from over. Clearly, the earnings just came out. Big boy earnings, though, are definitely tomorrow. And when you've got Apple, a heavyweight like that, coming out pretty much the same time as like Amazon, it is going to be on, people. But there's been some pretty heavy selling across tech. Listen, again, there's no easy trade at this kind of critical or pivotal moment in the marketplace. You know, the rally, you can call it on the rocks, but we got to get a better feel for what bonds are going to look like in the next couple of days. The first and most pivotal announcement is going to be GDP in the morning. Thereafter, well, we should be able to get some decent allocations on. If there's going to be a point in time, okay, that we're going to step in and really start to fire, it's going to be, again, post GDP tomorrow, but prior to, of course, the Apple and Amazon earnings announcements. Because again, we've seen what even negative earnings can do to a marketplace. Obviously, this rally is fairly strong. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.